Hello friends, welcome to Varika's Learning Vlogs. This is CA Prince George and it's my second video on the concept of agricultural income as per the new income tax bill 2025. In my first video, I have dealt with in detail on the meaning of the term agriculture because it's not defined anywhere in the bill or the Act of 61. Even the Constitution fails to define it. I've also dealt in detail with respect to the legislative powers of union government or state government to not tax or tax agricultural income. And we know by now that union government doesn't have the power, but the state government does have the power to tax agricultural income as per entry 46, the state list of schedule 7 of Constitution of India. In fact, there are many states who have gone ahead and passed laws related to agricultural tax on agricultural income. In today's video, we are going to study the definition of agricultural income as per the new income tax bill 2025, that is section 2 subsection 5. Before that, I'm just wanted to clarify one thing, that I am quite mindful of the fact that we do not use the word section for a bill which is still not passed as law. Instead, the right word to be used is clause and not bill and not section. But because we are much more familiar with the usage of sections and subsections, then clauses, subclauses, so I'll continue with that usage so that there are no ambiguities when I am citing sections, subsections. There is no confusion. Right. So let's start with section 2 subsection 5, the definition of agricultural income. It has the subsection has 4 clauses, A, B, C and D. Let's start with the clause A. Now clause A says agricultural income is any revenue or rent derived from land situated in India and used for agricultural purpose. Now, this clause has 4 parts. The first part talks about rent or revenue. The second clause talks about, the second part talks about land. The third, land situated in India. The fourth, land used for agricultural purpose. So let's break this down and understand it better. The first part, rent or revenue. Now what this section envisages, this clause envisages, is agricultural income which is in the nature of rent or revenue and not any other income. It's not talking about interest derived from land or property derived from land. It is only talking about rent or revenue derived from land. And rent and revenue is not defined anywhere. So we have to understand it in the normal parlance in which we use these terms. For example, when we say rent, we know that what it means is there is a landlord, that there is a owner of a property or an asset who has given this property or asset on rent to somebody else for use of that somebody else in return of some consideration in a fixed periodicity. It could be monthly, quarterly, half yearly, and also these arrangements are for a fixed tenure. It's not permanent. It's not an outright sale. So that is how we understand rent, and that's how we need to understand rent even in this case. The second term used is revenue. Now revenue, let me make you understand using an example. Say there is a landlord who has a land, agricultural land. He doesn't want to use get involved in the agricultural activity on his own, so he outsources it to somebody else. Now that somebody else performs all the basic essential agricultural activity of tilling, sowing the seeds and planting, watering, then harvesting, and then in fact going and selling the produce in the market. And the understanding is whatever is the consideration out of sale of the produce will be divided between both the parties equally. Now this is a classic example of revenue sharing, and that is how we have to understand the term revenue. Of course, there are umpteen number of case laws with respect to the meaning of these terms. We are not getting into all those case laws. For our understanding, this is enough. Another important aspect here is that we are talking about rent and revenue derived from land. So there has to be a direct association with the land. There cannot be a situation where there is an indirect association with the land and the income is claimed as agricultural income, the rent or revenue. For example, if there is a company which is exclusively into agricultural activity, say of farming, and the company distributes dividend to the shareholders. Now this dividend cannot be considered as income, agricultural income in the hands of the shareholders, because there is no direct association with the land, and this has been clarified in case of Mrs. Bacha Gusdar versus CIT. It is a 1955 Supreme Court judgment which was quoted in which was published in the 27th edition of ITR in page number 1, where it was clarified that unless there is a direct association with the land, the income cannot be considered as agricultural income. So that was on rent and revenue. The second part is land of this clause. Now when we say land, we are talking about land, we are not talking about air or water. So say for example, if there is an agricultural land wherein there is also a natural pond inside the agricultural land, and this pond is given on lease to somebody else to do fishing, and the owner of the agricultural land and the pond receives some rent. Now this will not fall in this clause, because it is talking about land, the rent from the land. Strictly going by the definition, this will not fall. Depending on the facts of cases, maybe the situations might arise that even this can fall in this subsection. But for our understanding of pure understanding of this section, water will not be considered, right? Now the second part is of land is we are talking, when we talk about land, we don't talk about the classification of the land in the revenue records, government records. So we don't mean a land which is classified as agricultural land, right? Or a land which is classified as non-agricultural land. It is irrespective, it has to be a land. Then the third part is it should be situated in India. Now this is relevant because there can be a situation where there is an agricultural income which is accruing outside India from some agricultural activity of a resident who is in India, of an Indian resident. Now the resident cannot claim that to be an agricultural income in India and claim exemption, because the land is not situated in India, it has to be situated in India. The fourth part is the most important part, that the land should be used for agricultural purpose. Now, as I said, agricultural or agriculture purpose is not defined in the bill. However, in my first video, we have dealt in detail on this subject, so you must go and watch that subject to understand the meaning of agriculture and agricultural purposes, because that will form the basis of not only understanding clause A but clause B, clause C and clause D, right? I just want to mention about one case here, which was the case of it's an IT-80 case of a Hyderabad IT-80 case, which was with respect to mushroom farming. Now the question that arose to IT-80 Hyderabad was whether mushroom farming will also be considered as agricultural income. So the the judgment of ITAT was that yes, it will be considered as agricultural income, because even though mushroom farming is done in stacks, it is not done on land itself. These are vertically placed stacks wherein mushrooms are fostered, mushrooms are grown. It's an artificial um, uh, culturing of mushrooms. So question was that when there is no land, it is not situated on land, rent or revenue received derived from land, but here it's not land, it is inside a room maybe and vertically stacked. So will this be so it said yes, it will be, and the reason it gave is that when we say land, we are talking about some characteristics of land, characteristics of soil. So maybe the mushrooms are not directly on the land. I mean, it's not directly cultured on the land, but soil, which is important ingredient of land. In fact, the most important ingredient of a land for the purpose of agriculture. This soil was taken from the land and was placed on the stacks. So that partakes the qualities, the characters of a land, and that's why it was held to be agricultural income in this case. Now let's talk about clause B of section 2 subsection 5. What does this clause say? This clause says that any income which is derived from such land by performing 1, 2, 3 different types of activities. Now this clause is also referring to a land which is situated in India and is used for agricultural purposes, as was clause A. But here there is a difference. Now the focus has shifted in terms of source of income, has shifted from land to activities. Clause A, the source of income was land. Clause B, the source of income is not land. It is still the basic premise, but the source is the activity which are performed on the land. And these activity are, number one, agriculture itself, performed on the land. So the section says any income derived from such land by, number one, agriculture, number two, by performing such processes which are ordinarily performed by the cultivator or receiver of rent in kind, to render the produce fit to be taken to the market. Number three, the third activity is by sale of the produce after performing such activities in the market. So these are the three activities which becomes the source of agricultural income. Now you must have noted it's only the third subclause wherein we are actually selling the produce. In subclause 1 and 2, it is not sold. So let's take it one by one. Any income derived from such land by, number one, agriculture. Now how can you derive income by agriculture alone, on its own, unless and until you sell in the market? And as far as sale in the market is concerned, it is already covered in the third one. So what does this mean? How can you derive income by agriculture? Well, these are the cases wherein one has to consider notional income from, for example, stock which is lying with the farmers, stock of produce. That stock could be for own consumption or for the sale. So that gets covered here. The second part is any such income which is derived by such processes which are ordinarily performed to render the produce fit for sale in the market. Now, what are these processes which are ordinarily performed? For example, in case of betel leaves, when it is harvested, it is wet. So it needs to be dried to be taken to the market and sold. It is not necessary that it will not, the betel leaf will not have market. It might also have market. But what needs to be seen is what is ordinarily done there. If ordinarily it is dried and cured and then sold in the market, then it is covered under this subclause B. So now what is the relevance of this? Unless and until it is sold, how can there be an income? How can this activity on its own generate any income? Well, again, these are the cases where one has to consider the enhancement in the value after the processes are applied on the produce. And this becomes especially important when you are valuing the stock in trade, stock which is lying. So say for example, I have a betel leaf stock which is just harvested and I have to close the books. The value of betel leaf is say 100,000, a lakh, if it is sold in the market as such. And suppose there is a market for it, but I am not selling it, because ordinarily in that area it is sold after drying it, though wet also have a market. Now in the next year, I have dried the betel leaves, still I have not sold, I have dried it. Now I am closing the books. Now at what value do I, what should be my agricultural income at this stage? That is the enhancement in the value. Say the enhancement in the value is just 10,000. So this 10,000 is the agricultural income for this year, and 1 lakh was the agricultural income for the last year. Both the cases, the betel leaves are still not sold. Now the third part is, after the produce are sold in the market, so the sale value also becomes, the sale value is also agricultural income in the hands of the farmer or the cultivator or receiver of rent in kind. Now here there is an important point to be noted, that where for example somebody buys a standing crop of say betel leaves. Now that person, he harvests the betel leaves, or maybe he doesn't harvest the betel leaves, the farmer himself harvests the betel leaves and gives it to the person. Now this person and sells it to the person. Now this person applies all the processes of drying and curing the betel leaf and making it fit for sale in the market. Now this is considered to be a trading activity. Now when there is an enhancement in the value, that will not be considered as agricultural income in the hands of the person who have bought that standing crop, because the provision is very clear that these processes has to be performed either by the cultivator himself or by the receiver of rent in kind. Now let's see clause C. Clause C, clause A and B, we saw that the source of income in one case was the land, in the other case it was the activity. Now comes to clause C. Clause C, the source of income is the building. Now this building is owned or occupied by the cultivator or the receiver of rent in kind, and it should be situated in the immediate vicinity of the land which is used for agricultural purposes, and from which the income which we just spoke about, agricultural income, is derived. So it should be in the close vicinity of this land and should be used by them as a dwelling house, as an outhouse. Usually the objective of this is to to monitor the activities on the land. to keep vigilance on the land. So if there is any income which is derived from such building, it is also considered as agricultural income. But then there are some caveats that this building should not be should not be located in certain specified area. Of course, it should be in the immediate vicinity of the agricultural land. But even if it is in the immediate vicinity of the agricultural land, it should not be within the municipal limits or within the extended municipal limits as is defined in section 2 subsection 22, which is the definition of capital assets. There are certain exceptions which are given, and as a part of exception these limits are also provided for, so one should go and read those limits. So the objective is very clear, that if that building is in the urban area or within certain limits of the urban area, by urban area here we mean municipal area or the cantonment area, then the income which is generated from that building is not considered as agricultural income, otherwise it is an agricultural income. Well, let's talk about now clause D, which is the last clause of section 2 subsection 22. Clause D talks about income which are generated from sale of the saplings and seedlings from in the nursery. So even that is considered as agricultural income. It's a plain section, there is no ambiguity to this. However, what if the same nursery also sells bouquets? Will that be also considered as income from agriculture? Well, my opinion is probably if it is a simple assemblages of flowers and stems, then probably it could be considered as agricultural income and just an extension of sale of saplings and seeds. However, where there are more value addition to the bouquet in terms of creating a separate base and some structure around it, then probably it would be difficult to consider the same as agricultural income. Well, with this we come to an end to the understanding of agricultural income as per section 2 subsection 5 of the new income tax bill 2025. I am not getting into rule 7 of the income tax rule 1961, which is with respect to bifurcation of or splitting of income between agricultural income and business income in certain cases, like in case of rubber, etc. Because in 2025 bill there is no such rule still provided for, so that's why I'm just avoiding to get into it. With this, thank you so much. In case you have any doubts, please reach out to me on LinkedIn, or you can drop a comment on YouTube as well. Thank you so much.